Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. We're living in a new world of imposed distortions. Ethical politics or business dealing is out the window. Trust is being replaced by force. It is hard to see how this will end well. After all, business relies on trust, honesty and integrity. Without it, why would you make a deal? The result can only be higher risk premiums. First, the annual Davos meetings are underway, and today they were dominated by US presidential bluster, where he claimed he would force interest rates down, force the oil price down, and force other countries to put America first. He also threatened any country who challenged the American fangs with taxes on their activities in their own countries. Billionaires don't see the need to pay taxes, their fair share or any share, to anyone. US jobless claims fell back sharply from last week's big seasonal increase, but the fall was not as much as seasonal factors would have anticipated. On a seasonally adjusted basis, they rose. There are now 2.24 million people on these benefits, which is actually the highest since the last Trump administration. In the regions, the December factory survey from the Kansas City Fed revealed a further contraction. New order levels were low, and despite improved manager sentiment, they actually don't expect new order levels to rise much from here. In Canada, retail sales rose, and by much more than expected in December, their best December since 2019, and the biggest any month gain since May. And Japan said its exports rose 2.8% in December from a year ago, meaning that 11 of the past 12 months recorded export growth. Only 9 of the past 12 months recorded import growth. And all eyes will turn to the Bank of Japan and their expected 25 basis points rate hike later today. A rise in South Korean business sentiment in January comes after authorities there reported a quite soft fourth quarter GDP growth outcome. And Singapore's CPI inflation was up 1.6% in December, the same as November, and slightly more than the 1.5% expected. Taiwanese retail sales rose 2.9% in December with a modest performance, but Taiwanese industrial production surged 20% in December from the same month a year ago, which itself wasn't especially soft. In China, they're directing insurers to buy equities, a move designed to put a floor under the pressure on those markets. After peaking in October and at their long-run average, the EU Consumer Sentiment Survey has slipped to be more net negative since. But the latest January 2025 survey essentially held the December level to be almost 2 percentage points better than year-ago levels. In Turkey, their central bank claimed overnight that inflation there is under control at 44% and heading in the right direction. So it cut 2.5% from its policy interest rate, taking that benchmark down to 45%. And driven by rates out of China, container shipping freight rates fell as sharp as 11% last week, although they're still 140% higher than pre-pandemic levels. The Baltic Dry Index for bulk cargoes fell a sharp 16% last week too, now at the very lower end of its long-run average level since 1969. And the US Treasury 10-year yield is at 4.65% today, with a 4 basis points rise from this time yesterday. And the price of gold will start today at $2,757 an ounce and down $1 from yesterday. And oil prices are down $1 at just over $75.50 a barrel in the US, while the international Brent price is just under $78.50 a barrel. And the Kiwi dollar is now at 56.8 US cents and up 20 basis points from this time yesterday and more than a 1-month high. Against the Aussie, we're basically unchanged at 90.3 Australian cents. Against the euro, we're up 10 basis points at 54.5 euro cents. But that all means our trade-weighted index starts today just on 67.2 and also essentially unchanged from yesterday. A fall against the yen offset a US dollar rise. And the Bitcoin price starts today at $106,275 and up 2.6% from this time yesterday. Volatility over the past 24 hours has been moderate at plus or minus 2.5%. Monday is the Auckland anniversary holiday and Australia Day, so the news flow will be light then. But we will have continuing regular service on Monday. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.